Smart Money Concepts by Lux Algo. If you don't have this, you can look up order blocks. And on top of that, you can also look up fair value gaps, because these are the main things that I really use Smart Money Concepts for. If you come up here into the actual settings tab, I do have my settings changed. A lot of times you'll see these things like CHOHC. That means change of character, or BOS, which means break of structure. And so those are important, but to be quite honest, the only ones I look at is the swing, week, high, low. I personally don't use the intraday ones. I have everything else set to regular, and then style, boxes, lines, everything set to regular. I would honestly just keep the structure on until you guys can start noticing at your own, like what is a break of structure, what's going to end up, and obviously you're going to use other indicators inside of them. So one of the things that this really helps you guys with is going to be fair value gaps, which are very important. Can anybody tell me the difference between a fair value gap and just an actual price gap? How does a price gap occur? Why would there actually be a gap there? After market. Yep, so we're looking at 4 hours here. And if we play through, we're gonna let this play through and you're going to see, boom. So right here on Friday, September 8th, we closed Tesla at 248.39. And then what happened? Monday morning, we opened up at 264.10. So gaps occur between market close and market open. Most of the time, when you see like big news occur, it's on a weekend, is why. Can anyone tell me why big news, usually wars, usually delivery numbers, besides earnings, right? Why? How come big news just always seems to come out on the weekends? It's because you can't fucking do anything about it, right? Like you just, most of the time they put it on the weekend because you just can't do shit. The whole market's closed and then we see these big gaps, right? So a price gap is when the market opens significantly higher or significantly lower than the candle prior to where the market was closed and price actually gapped. There's a saying, all gaps need to be filled. So what I normally do and what I used to do back in the day is I'll just take this block and I'll stick this right here, knowing that there's a gap. I actually don't know how this is gonna play out, but let's just see what happens from here. So we get a fair value gap that actually is sitting here. This should just be a price gap. But we start to see this price gap, all gaps need to be filled. It doesn't mean that it needs to pull back and test. We do actually pull back. You could consider that not fully filled. The full fill would be down here to 250. So now we're down here, boom, and gap fills. All right. What else occurred here? So we have this price up. I did not actually know the gap was going to actually fill on there. I really was surprised. Not surprised, but I actually didn't know we were going to pull back and fill that gap. Bearish fair value gap, exactly. So we have this fair value gap here. This also bearish. The other thing too to understand is we have another fair value gap and another price gap actually down at 218. But as we allow this to play out, we have this big block here that we push through and hold. But now watch what happens. I think it'll actually happen a little slower. We'll let this play out. So we're seeing the hold. Funny enough, right? If you were looking to go long, you could have taken your Fibonacci retracement, swing high to swing low, and look, the 0.5, our golden zone, coincidentally, where does that line up at? The middle of the fair value gap, which usually for a fair value gap to fill, it has to hit that middle, at least the middle, right? So our time to go long would have been a pullback down at 260, and a reversal of this move would have been if we broke and held under 260. But as we allow this to play out, you'll also notice that as we start to sit, a big bearish order block, I believe, comes in pretty soon. I have to speed this up a little bit. Boom. So as we get this drop, that big bearish order block comes through. We know that there's a support down here at 251, big drop, bearish fair value gap. Okay, so now what's happening here, right? I don't even know what's going to actually occur. But what are some potential signs that fib entry got rocked? Did you have right through it? Right through it. But you know what's even crazy too is look, if you come up and move through here, right? Look at what happens too. If we look at the 1 hour, so this is a 4 hour candle, I'm sorry. But watch what happens. It comes to this Fibonacci level, right? The 4 hour drives all the way through, tagging all these stop losses out. And then we close it low of day under support. That's not a good sign, right? It's not a good sign because it shows that the bulls were able to come in, but they just were not strong enough. So then we get these drops through here. Now what is this? Can anyone tell me what these are? Those red blocks. Don't know. Okay, so those are fair value gaps bearish. So remember how this gap filled? We're watching this fair value gap. Now we have two of them to the upside. Now when it comes to fair value gaps, let's just actually talk. Why can I not post that? It's just not allowing me to post it. Oh, the file's too large. All right, whatever. Let me get a better example. Okay, the hell? File's still too large. Okay. I'll just use this as an example. Let's go find Let's pull this back. Oh, we're not going to have any fair value gaps that I really want to use in an example. Okay, so this is actually a good example here. So where we have this fair value gap, we also have this actual price gap. But where this candle opened, so this candle opened at 257.40.63, comes all the way down, closes at 249.66, and then the next candle opens once again right here at 249.66 and plunges right down through. So we have, even though there's not a price gap here, there is a solid chance that we are going to not recover. I want this to be very known. When you see these fair value gaps, it doesn't mean like we're just going to completely recover most of the time and we're going to push up to all-time highs. It just means that like it has to be tested. So the chances of us pushing back up to test 252.70 is very high, especially when we're sitting on this bullish order block. Then the test of 263 seems pretty high as well. But as we're looking at this, we also see that there are two fair value gaps up here that probably need to be filled. But look, we have a price gap at 220 and we also have a fair value gap at 220. So if we were to play this through, we have this bullish order block that we're going to watch, seemingly like it's going to hold, drops through, doesn't, bouncing on the second block at 235. From here, we push back through. And now we still, first fair value gap filled. Remember the fair value gap was sitting at 250. Now we're watching for this fair value gap to fill. Just filled up to 263. Another fair value gap pulled back. I count this as a fill. Honestly, the shit can get a little wonky sometimes, but a fair value gap fill, in my opinion, and Rustic, you can definitely chime in on this because I know that everybody does this differently. But what I'm usually looking for is at least this pullback to that middle fair value gap. Really, I think it has to close below the fair value gap. Indicators call fill inside of, yeah. So for me, I'm usually looking at to close and fill the middle of 252.47, right? So I would actually consider this fair value gap to be filled. So now we know that this fair value gap was filled, and now we're pushing up into this resistance point. So now let's go back through and let's add some stuff. We're not going to get to the watch list, guys. I'm sorry, we can do it tomorrow. They're pretty self-explanatory, and this probably helps you guys a little bit more as well. Wicks do the damage, bodies tell the story. Exactly. So now let's add some things, okay? We're not going to add volume profile because I hate the volume profile on TradingView, honestly. But what we're going to do, indicators that we can add, right? First thing, I just like to run a TTM squeeze or a BBK squeeze, a TTM Pro, whatever you want to call it, but some sort of squeeze indicator. You don't have to run it, but I like it, and we're looking for those bigger moves that have higher RVRs. Most of the time, we want to see some sort of squeeze engaged. The second thing that we want to see, and it's one of my favorite indicators, is on balance volume, or OBV. In layman's terms, instead of having the chart at the bottom where you see all the bars of volume, this is a line. So if we see this line coming up, it means volume is coming into the stock. When we start to see it come down, it means volume is getting sucked out of the stock, okay? And as we see this divergence or this double top that can happen as well, that's not a good sign either, and we'll talk about that in a minute. So we'll chuck this on balance volume on because we want this. Usually we want to look at RSI. Now the on balance volume and the RSI will tell different stories, but a lot of times they will move together. For my RSI, I usually turn off the Bollinger Bands and the upper band and all this shit. There we go. Just keep this. So as we're coming up into this level, let's just play it again. I don't even fully remember what happens, but this will be good. So we're consolidating here. What could you call this, right? What pattern was this? Bull flag or symmetrical triangle, okay? Look how funny this is too. We're to come in from swing low to swing high. Look right where we bounced, right? When was the time to go long on that symmetrical triangle, right? Price came up, pulled back, filled the fair value gap, bounced off of our point of control at 244 to 241, consolidated, big fucking order block comes through between 243 and 252, and then what's happening with this on balance volume? It's ripping to the sky. Now, this was late, but let me ask you this. How come you could have been good going long at the open? So at open on Monday the 11th at 9:30, why would that still seem like a decent time to go long? It's already broken out. I'm not actually sure if it really even was a good time to go long, but like buying into this move from 264 continuing up to 272, because we opened and there's with a gap after no, there wasn't a tight squeeze, but after a bit of a squeezing, and there's a shitload of volume behind it, right? Like the on balance volume is pushing up, and we're moving into this. Knowing what to do now, I would short this. So as we're coming up into this level, what do you notice? So if you wanted to short this, it's actually really good V. So let's talk about this, right? Looking at this now, you see the breakout. Number one, I would not short this anytime soon because there's still volume behind it. Where do we want to short this? If we wanted to, what would be a level to tell us? Above OB, exactly on order block. And so look, so what else, right? What else is sitting up here? So we have this order block at 300 to 290. Yes, and the gap fill. Exactly, Rustic. So boom, right here, we have this gap fill. So we're not sure if it's gonna run up to 285, but here's the deal. If we go long, we know that we have volume. We know that we're breaking out. We know, like I said, that there's volume behind it. We know that there's a gap up to 280. So if we push and hold over 280, this should hit 300. If not, then we're gonna be in some shit. And I don't think we actually push up to 300, but we would not go short yet. Like there, even if this snaps back, it's just like, in my opinion, though, it's not worth it to go short yet. Especially now this changes a bit, right? And why does this change things a bit? What happened here? Why could we potentially now say, nah, I still wouldn't go short, to be honest, but what happened, right? Bearish order block showed up right here between 272 and 280. So as we're going up and we're moving our way up these support levels, right? And we'll talk about Microsoft, which is a day trade today that I did decent on. Not as much as I should have, but we're moving up through these levels, and now we're starting to see some weakness. I still wouldn't short, but moving up into 280, we also know 280 is a big resistance, and then from there we get that subsequent drop that we went over before, and then we let this play out. 3 times speed, tries to bounce, tries to get this push back up, fair value gap fills, fair value gap up here fills, another order block comes in, and now we end up closing around here. And if we move into this 1 hour, you'll probably actually be able to see that trade. Where is this? The 11th, I believe, was on the 11th. Measure that fib from the minus OB to retest. Here, let me go back. The 4 hour, right? Which one were you talking about, Rustic? Are you talking about this fib from here up to this order block? Or are you talking about the bigger one? So 70% retracement of that fib would be somewhere down around 256, where the equal highs are. Like you're talking about right here on this one. From this swing low down at 245s, or do you mean the bigger swing low all the way down here, up into those equal lows? Should like a co-stream one day. Start at equals and up into here. So like actually even here, that's like a 70% return. I think is what you're talking about. Next swing low. Oh, from equal highs to next swing low. So down. Oh yeah, I know what you're talking about. Yeah, boom. So from here. Exactly. So I think this is what you're talking about. I'll make it bigger. So from this equal higher low here, where you had the 0.61. Dude, I'm fucking down here. The equal low where we had the 0.618. All right. So down, I think I don't know what level you're talking about, to be quite honest. I think you're, but you know what's even funny too? You're talking about the 70% level too. But even with this fib, like how we were talking about with golden fibs and those levels, right? So this here is the 0.618, which means a 61% pullback from this high. But like we were saying, with the stop loss down here, this is like your 70% range. 0.618 right here is our golden zone. But then look what happens. We pushed over it momentarily. Think of how many people stopped out. And now let's see if we move our way back down to 240, but we're going to have earnings coming out. But even just looking at this is why having some semblance of a wider stop is usually going to help you. I would rather you guys taking wider stops with lower position sizes to allow yourself to not get knocked out. Oh, here we go. Hold on. Let me zoom this. Can I actually drop this on my chart? It'd be fucking dope. Hey, I can. Oh, from swing low. Oh, so that's what wait, what the fuck? Oh, you're talking about from here, this bad boy. Yeah. So look at this too. Like Rustic was saying, I can actually pull this up into here. So this move here, yep. Then 100% extension to target. So like from this level, right, equal highs, so double topping. Here's the other thing too. I didn't even look at this. This is actually even better too. Let's I get rid of this. Boom. So watch what's happening here too. I'm gonna make sure that this is the right level since I can't fully see. Yeah, it is. So look what's happening here, right? We have equal highs. So we're coming up and we're tapping the equal highs. But what's happening with this RSI at the time? As the stock is making an equal high, it's diverging. Exactly. Right? So as the stock's making a higher high or the same high, the RSI is making a lower high, meaning that this movement is weakening. Okay? So this right here is not 100% the time, like we're going to bet the fucking house to go short, but we have a lot of solid evidence sitting here, right? If we drew this Fibonacci level, we have this bearish order block. And sitting here, we know that if this level snaps from 263 down to 270, all the way down to 264, my target probably, if we ended up breaking 253, would be down at 240 minimum or maximum. But this is a solid trade. And even if, you know, because we're looking at a 4 hour time frame, if we waited for this push up, you go short here, and you could set your stop somewhere around this level, and then take profit down between 264. But honestly, with this gap, probably back down here like 253. And I'm telling you, like, you guys, this is the other thing too, like you see me and Rustic sitting here, like we both see things and see opportunity differently as well. And it's like, you know, V, you were asking like, well, the question now is, how do we find out when to buy and sell? Well, there's opportunity everywhere. And that's where finding your strategy will ultimately work out what's better for you and for what you enjoy. Whether you're looking, you want to see strength continue. So if you were trading this uptrend, like let's just say you got in down here at the bottom, Thursday, August 17th, and you're playing this movement up and you're like, all right, well, now that we're in, right, well, the time to sell is the same time that we start to see go short. We're making higher highs. As this stock comes up and makes a higher high, look what even happens here. Let me get my brush here. Look what happens here, higher high, but then look at the RSI. It makes barely a higher high. It's not a divergence yet, but barely a higher high. But we're seeing weakness. So we come back, and now as we test this level, we see the bearish order block come through, and we see the divergence on the RSI. It's a pretty solid time to start to scale out of this position. But there's still upside because we know that there is a gap up here between 290 and 280. So when those order blocks show up, panic? No, I wouldn't say panic, but just take it, like I always say, take it like we're compiling a case. Just take it as evidence. All right, so let's do this really quick as an example. Talk about a day trade I took on Microsoft today. I actually didn't even see how this played out. After I closed it, I'll get rid of all my indicators besides these. All right, cool. Oh wow, it actually didn't even play out the way I wanted. Okay, so we're gonna go through, we're gonna take a look at this morning, and I'm gonna go over a potential day trade, why I took it, and how we're gonna implement these order blocks and everything else into this. So I like to trade harmonic patterns. I definitely don't trade harmonic patterns like a regular person would. Harmonic patterns normally are very, very accurate, but they have to be taken quickly, like very quickly, because they're all based off of fib levels. So if we look at this harmonic setup here, this is a bullish harmonic setup from Friday. If we look at this 80% success rate, that from here at 328, we will push up and hit target 1. Very good. Right? Now the shit thing is what? It's like the RVR blows, right? But now what we need to do is figure out, like I would say, what's going to give us still a high risk or a decent risk reward, but with a high chance of profit. So now, as soon as this trade happens, we see Microsoft go against us. This is not the trade, but you're going to see multiple trades move into each other. We see that there's a sell order block at 328, and we see there's a buy order block and a strong low down at 326.50. So where do we go long here? There is also a fair value gap that we didn't fill. Close to filling. So let's go through and let's actually first look at RSI. See what the RSI is doing. Okay. So stock is making a lower low. Okay. What's the RSI did? Actually made a lower low. That's not good. So let's let this play out. I want to go long down at like 326.50. Okay. Bullish order block sets up. And then we get this big gap up. All right, so this was an overnight swing. This thing obviously fucking hit. We would have never got a position, but this gapped up overnight. So then this morning, I see this happening. So we see that there's this massive bearish position open, right? But the stop loss is like sitting all the way up at 321. Like we're not gonna fuck with that. The RVR is not solid enough. Market's breaking out and pushing. So what I want to see is how does price respect these order blocks? Just like V said, like when we see these order blocks, we just get out? No, right? What we're going to do instead is we're going to watch how this moves. And if we start to see divergences and we start to see weakness, then we're going to get in. Now, here's another thing I really like to use, ATR trailing stop loss. So remember before how I was saying that what we're going to do is take our average true range and we're going to set it at a multiple of 2. Okay. So this indicator will automatically say, here's 2 times the average trailing stop, and it's going to represent it in line form. So as we're allowing this to play out through the day, I'm just going to let it push. All right, we're moving up into these resistances. What is the RSI doing though? The RSI is still making a higher high, right? RSI is still making a higher high. I could go short here because I know that there's an 80% chance that we'll pull back down to 328, but I'm not going to go short just yet. Okay, here's another thing. I wouldn't have gone long, but you really could have gone long here. Because even though this trade was open, Fibonacci level probably going to pull back to 330 since there's, we need to see if volume's still coming in, and then we'll see if this pullback to that fib eventually breaks out, which we didn't end up trading that. But I need to see a shitload of exhaustion, not just like, oh, here's the setup. Like we need to see this thing start to get tired. So now what's happening? Okay, let's assess the situation again. We push through those blocks, and now there's a bullish order block hitting. That's not a good sign, but what is happening here as we're making higher highs on the V? Yes, lower high on the RSI. So as the stock is going higher and higher, the RSI was at 85.04. Now the RSI is all the way down at 62. The second thing is that we're making a higher high, but the RSI is making a lower high. So we don't just short right now. Because guess what, guys? We're trading against the bulls keep coming in, right? And there's no sign of this breaking down yet. So if we short right now, we could be right. We probably would be right looking at our averages. But there's much more to this than just entering there, right? Isn't a lower high on the RSI? Yeah, exactly. It's a sign. It's a sign that the strength of the most recent move, which is up, is beginning to weaken. So now the best divergence you can have is 3, meaning stock makes a higher high, RSI makes a lower high. Then the stock makes another higher high, and the stock makes a lower high again. That is like the best. So now, to be quite honest, like with me, if I wasn't trading publicly with you guys, I'd short here. And I would go in with 1/3 of my position. I'd go in with, like, let's just say I planned on having 100 shares. Like, I would go in with 33 shares here, short. And the reason for that is because I just don't give a shit about hitting the perfect time. Like, I would rather just know I'm in it. And then from here, I'd literally set an alert at 341.14. I'd set my take profit down at 329 and I'd go work on my book. Like, I would actually just leave the fucking computer. There's no need for me to fucking try to scalp this 100 times. Like, I'd just fucking leave. It's just like cooking. Like, if I don't fuck with it, you know, like, we're good. Doesn't mean I have to be right. It's just like I don't have to put myself through the mental turmoil. Because here's the deal. Losing money sucks. Sitting there all fucking day watching yourself lose money sucks even more. So, like, I'd rather just not do that. And it's not like I'm the money I make is even better if I sit there all day. It's not. So I would probably start a small short position here. And then what we'll do is we'll just let this bad boy ride out. And we'll see how this pans out. And I'll show you when the actual breakdown of this would happen. Okay, so here we go. Another one. Another higher high. And the RSI did make a higher high this time. So still, this is not the confirmation. Boom. Okay, here is confirmation. Why could this be not confirmation that it's definitely going to occur, but what happened here? It didn't happen here before. What happened on this move that didn't happen before? Gap. So there is a gap, yes, but what specifically happened with price structure? Okay, what happened with price structure? CV type in. Everything looks higher. All right, break of structure by, okay, full break of structure would be breaking 334.21, but what happened differently, right? This time, we have actually broken below the 11 SMA, which we did before, but we quickly re-pushed back up. So now we have 2 of them closing under the 11 SMA and 2 candles closing under the ATR trailing stop. So now we have more evidence. We know that there's an 80% chance that Microsoft is going to pull back down to 328. We know that there is now a divergence in play. The second one's not as strong, but we know that now we're holding under the 11 SMA, 2 candles. But the problem is we do have a fair value gap. So I would assume that this will actually snap back up to 335 and test. See what happens. All right, there we go. It's pushing up. Okay, so now what's happening, right? We came up and now we're holding under this level. And the RSI is fucking tanking, exactly. And the RSI has crossed through the MA, the moving average down there. This is the time to go short. And this is when I went short this morning at like 10:46. Now I hit with my second short position, and if I wasn't trading with you guys, my third short position would be up at 338.57, and then the full-on stop loss at 341. So then my average is somewhere around here. But now, how do we play this? Okay, you can play this one of 2 ways. You can play short here at 335, stop out up over 341.19, and take profit down at 328.14. Statistically, you have an 80% chance of this happening. Doesn't mean it's going to, but you have an 80% chance, which means you have a 1-to-1 risk versus reward, which means if you took 80 or after 100 trades, you would have made 8,000 and you would have lost 2,000, meaning net you would have made $6,000 profit. Okay, solid, super solid. This is mainly what I trade all the time. Now, this is why a lot of you guys actually bring up a ton of good questions. You're like, why the fuck are you always going against the market? I rarely go against the market ever. But when it comes to day trades, I'm usually always going against the market, and it's because of this, right? Because it doesn't mean that this has to reject. But like, would you feel bad taking this trade and losing money? No, you shouldn't. Dude, we have a triple bearish divergence. RSI is creating statistically an 80% chance that we're going to drop down to 328, and we have a 1-to-1 RVR, right? And here's the thing. I'll actually show you too, which is funny. If you guys remember last week, I literally got, 2 weeks ago, I got my fucking teeth kicked in on SPY. But I can show you exactly how this occurred and why I wasn't upset about it. This is Friday, October 6th. So this is when I got absolutely fucking creamed, right? We know, guys, there's an 80% chance of profit. But look, 1, 2, 3, 4, 5, 6, 7 losses in a row. Like, the pattern failed 7 times in a row, even though it's right 80% of the time. This is why risk management is so important. And it's tough because I really try to stress this to people when they join. And I'm like, listen, like, even if I'm right 80% of the time, you can still lose 7 times in a row. So even if you're following of your account, even following proper risk management. But it's like, you can't take these 7 in a row and then be like, I'm done with this strategy, fuck it, and then quit, which is what everyone does. And then look, the week before you hit 1, 2, 3, 4, 5, 6, 7, 8, 9 winners in a row. 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21 winners in a row. This is why we trade with so little money. It might not seem that way because I'm trading with higher amounts, but like, this is why we trade with so little. Because we're literally investing in the fucking strategy and in our numbers, and we're not investing in the idea that somebody on YouTube is right or wrong, which is why when I lose money, I just truly mean I don't care, because I've spent the past 4 years fucking with this thing and testing it and building it, as well as all the other strategies I use. So when I take 7 losses in a row, I'm like, I know that this happens. Like, I understand it. Same with the trading bots inside of the Discord community. It's the same thing. They all run off of around the same shit. So there are ways to circumvent this. There are other indicators that you can use, but a lot of times this is usually what I'm looking at, right? So with Microsoft today, we'll just briefly go back quickly and then we'll hop off. We're going to be doing this for like almost fucking 2 hours. This is why I love live streaming, because it really helps so much. I will be recording this too. This is recorded. So going back, this is that short point this morning on Microsoft. Now, what do you think scared me out of this? Because my exact words were like, I don't like the way that price action's looking, right? We're trading up. And if we were to take that fib retracement and we were to pull this up, what level were we respecting? The golden Fibonacci, right? We saw the break below the golden fib, and then like the fuckery we always talk about, what happens? Gets bought right back up, pushes back up, consolidates for the day, and then craters to 332. Now, if I would have held my position, would I have made more money? Honestly, no, probably not. Because even though I sold when Microsoft was sitting at 333.36, this whole sideways consolidation might have eaten up 20% of my trade. And so a lot of times it looks like I'm taking profit early, but it's not that I'm necessarily taking profit that early on my day trades. It's that, without getting too complicated, volume drives the price of options. So when Microsoft craters, right, in 6 candles, 0.5%, everyone in their mother is loading up on puts, which means what? Volatility increases and the premiums increase. Exactly, V. So this 10-minute drop, then I would have made shorting from the top to the bottom, because there's just so much demand for my contracts right here. And there's not that much demand as we're taking all the time decay off of this, right? And that's an advanced strategy where I'm going to talk about in the courses in 2024, specifically how you guys can price out options and how you can understand all this to a very, very deep level. But this is what I like to use. And now looking here, right? Look at the bullish case. So look at this now for Microsoft. A bullish harmonic shows up here, okay? Stock's making a lower low. What happened to the RSI? Stock made a lower low, RSI made a higher low, which is a divergence, okay? But now look, we know that there's an 80% chance that it's gonna push to 334. We know that there's a big resistance level here. So I, for sure, would have went long. Now, we'd have to swing it overnight, which I'm not a huge fan of, but look at it this way. There's an 80% chance of profit, right? Stop loss is 0.2%. Honestly, I'd pull it a little lower, like down here. But we have a 2.5 RVR with an 80% chance of profit. I'll take the trade all day, and if I lose, fuck it. Like, there's no reason not to take it.